bit about the economy, and I'm going to talk about something else that I think is actually very interesting and things that are happening in place right now. So, for the first time, I think in a very long time, we had Blinken and Xi who pledged to stabilize U.S. China relationships. Once again, we had our foreign secretary go to China, meet their foreign secretary, and also got an opportunity to meet with President Xi. So, where I'm going with this today is very unique, is going to be very different than what I usually talk about. First of all, I think the world is getting smaller, and everybody needs everybody. And in the grand scheme of things, there are a lot of things that are happening in the world. But I want to stay relevant to today's topic, which I'm going to discuss in just a second. I know it's a little bit of a cliffhanger, but I'm going to discuss it in just a second. So the story is U.S. Secretary of State Antony Blinken on Monday ended high-stakes visit to Beijing with an unexpected meeting with Chinese president, right? Um, I'm sure there were a lot of high level things discussed. I'm sure the spy balloons came up. I'm sure there's other stuff that came up. Maybe the debt, U.S. Treasuries came up as well. And of course, China is expanding all over the world, and maybe they discuss some of that stuff too. But what we have to realize now is that the Chinese economy is slowing down. They are in somewhat of a recession. In the world of real estate, China is actually not doing so well. And this is not well publicized. It was well publicized a while ago, but it is no longer well publicized. China is now, they have overbuilt certain parts of the country. They have overstimulated the real estate economy. The real estate economy in China is actually not doing so well. This is where I'm going with this. The last world recession that we saw when it came to real estate specifically in 2008 was a result of subprime lending in the United States, and because everybody, and their uncles were getting real estate loans at the time, it was very easy, and it became very easy for people to, not pay their debt, which then resulted in corporations falling, which then resulted in real estate prices going down, which then resulted in more people just not wanting to pay off the debt because the real estate valuations and the pricing was so low, it just didn't make sense. So, for example, think about this. You bought a property for $1 million. It's now worth $500,000 because of everything that's going on, and you're still paying off your monthly mortgage on $1 million valuation. A lot of people realize that, hey, this is not what we signed up for, and we're not going to pay this debt. And because of that, as a result of that, the effects trickled, and we had this major recession all over the world. To which the likes of the country that I lived in at the time, Dubai, suffered dramatically. So Dubai actually, real estate prices went to about 30 cents on the dollar, maybe even lower in some places, and you could pick up real estate for really cheap. The problem was there was no liquidity. So even though real estate prices continued to drop, the fact that there was no liquidity meant the market was extremely soft. But once again, in today's video, I want to make a very specific point, which I'm getting to in just a second, which is the Chinese real estate bubble. Now, in my opinion, okay, and it's just an opinion, and it's just based off of the data that I track, which is what I report to you guys. I like to bring in data-backed thinking, right? So everything that I think about, that I'm thinking about in my business, that I'm thinking about in the world of real estate, I like to bring forward to you guys. So the U.S.-China relationship is a fairly, in my opinion, stable relationship, regardless of what goes on and, things that happen in the news and highlights that we get as a result of those things happening. I think that the U.S. and China relationship is actually a very important relationship. A few months ago, the whole thing was about how the world is going to get off the dollar and go on these other currencies. Before that, it was the spy balloon. Before that, it was something else, so on and so forth. And there's always going to be some drama when it comes to the U.S. and China as two global superpowers, right? Now, of course, the Chinese economy is set to surpass the U.S. economy over the next couple of years. So by 2030, I think it is when the Chinese economy will officially become like much stronger than the U.S. economy. But in the meantime, there's a few things that even China needs assistance with, right? They are a manufacturing hub, of course, and that is something that we need to look at. But I think what is happening now is that the Chinese are also open to building a stronger relationship with the United States, and the reason for that is because there is an economic depression that is happening, and it's taking a little longer for Chinese economy to recover than anticipated. Now, obviously, during COVID, things became very difficult for them. They went into a full lockdown that impacted the global economy once again. Then they went into a partial lockdown, and as they opened up this partial lockdown, I think what they were expecting was like massive growth to happen, just because there would be so much depression and there would be so much activity after a couple of years of really not moving as fast as they would like to. But that massive growth, now, that massive growth just did not happen. Obviously, there's things that happen, but the massive growth that was in anticipation did not happen. The real estate market is actually struggling. You have two of the largest private developers in the country that have empty units and are unable to sell them. And one of them was I believe it was the largest foreclosed or the largest default, rather, loan in the world, and that's how big that default was. Now, that got some press at that time, but since then we have really not continued to see what the press around those real estate defaults are looking like. And my anticipation is that it's very bad, and the situation is not going to get any better. I think that slowdown has impacted them enough to where now they're going to have to, go through some type of a mini recession ultimately, and then come out of that by stimulus. So that is something that I did want to cover. I feel like we get caught up a lot in the positive. So this is positive, obviously, or is it? It just depends on how they word what actually happened in the meeting, and these are the outlets that we're trusting, right? CNBC, CNN, Fox News, BBC, Reuters, whoever it is. We are trusting these news articles to paint a picture for us, and depending on which side of the political spectrum these people are, the article is going to be worded a certain way, either to create excitement or to create fear. And that is kind of what these people bank on. They bank on us either being excited or having extreme amounts of fear, and that is how they sell spots on their websites and whatever it is. So anyways, my point is that I think there is way more to China that we need to look at in the world of real estate right now, in any asset class, because I do think that they're overdeveloped, and we are going to either we are in the midst of like kind of seeing something happen right now, or we're going to see something very big that may in turn impact the U.S. Real estate market, right? Not directly, but indirectly, it may impact us here as well. Because if they go into a full-blown recession or a real estate recession, it is only inevitable that we will see it here as well. So we're not out of the woods yet. I know that the demand is still high. We still have a lot of incentives for people to invest in real estate. And, look, while everybody else was sitting on the sidelines, I myself ended up buying a ton of real estate here in Texas and other parts of the U.S. And I'm going to continue to buy I'm going to continue to buy the real estate. But what we need to realize that right now it's a very different climate. It is a buyer's market, sort of, in certain asset classes. In others, it's still not. Sellers are not coming to the realization that hey, the market is softening. Their prices are, or their expectations rather, are much higher and significant. And that's what they want. They want a last year's market this year, and the buyers are coming in with serious offers with the potential to close. And they're just not able to get the deals because the seller's expectations are too high. Now, the only way this will break, is if the sellers start needing liquidity, which has not happened because the banks are still lending money to said sellers or said businesses. So we are still seeing quite a few things that still need to unfold, in my opinion, in the world of real estate specifically. So that's something that we're going to look at. I'm going to make another video, hopefully right after this one, if not, on how this impacts certain things that were in the news just a couple of months ago that now become almost irrelevant, and that we don't hear about. That's a topic that I do want to discuss, but I will discuss that in a separate video. In the meantime, trending now, I'm just looking at this now on the website. This is completely off script. For you guys who don't know, so trending now, obviously it's not trending here. For you guys who don't know, Elon, here it is, trending 5. So Elon challenged Zucks to a cage match. And so I guess that cage match is happening, and they've picked a location for it. It's going to be interesting to see what comes out of it. It's just going to be super, super interesting. But it did make news. So it's something that I do want to discuss a little further. Maybe I'll make a separate video about it. just my thoughts on what kind of publicity this brings to both companies. What is the true motive behind something like this, and why Elon would really, as a Twitter CEO, attack Facebook this way. But I do think that there is I do think that Elon, did hire the queen of marketing and advertising for Twitter. In all honesty, and I do think that is going to result in a lot of cool things that Elon is going to do over the next couple of months.